Good afternoon, everyone, and welcome to the RAAS Research Group Stock Take webinar focused on the gold sector. I'm David Tasker, and it's great to have you with us today. Before we begin, a quick reminder. You can submit questions at any time during the webinar by using the Q&A button on your screen. We will address as many questions as possible during the company Q&A sessions and during the final discussion. Today's session comes at a pivotal moment for the gold market. After a strong performance through 2025 and more recent consolidation, investor focus has sharpened on the underlying fundamentals of both the sector and the companies operating within it. Our aim today is to provide clarity on the macro picture and connect you with three outstanding ASX listed companies making significant operational development and exploration progress. We're fortunate to be joined by RAAS senior analyst Josh Baker, whose detailed gold sector review, now available on the RAAS website, has become a key reference point for investors tracking macro trends, equity valuations, capital flows, and the ongoing M&A cycle across the gold industry. Joining us today are Horizon Minerals CEO Grant Haywood, Saturn Metals with Managing Director Ian Bamborough, and Aureka Limited with Managing Director James Gurry. Each company will present for around 10 minutes, followed by 5 minutes of Q&A. And we'll close with a panel session featuring all the presenters and Josh taking a macro view on the gold sector. To open today's session, I'd like to formally welcome and introduce RAAS senior analyst Josh Baker. Josh has spent years covering the gold sector with a focus on production, economics, cost cycles, macro drivers, equity performance, and asset level valuation. His work spans detailed financial modelling, sector-wide comparative analysis, and thematic research. His most recent gold sector review, published on the RAAS website, outlines the key drivers behind 2025's gold re-rating, the evolving M&A landscape, and performance trends across producers, developers, and explorers. Josh, thank you for joining us today, and we look forward to your sector overview.
Thanks, David, and thanks to everyone who's joining us live or will watch the recording later on. So today, next slide, please. Next slide, yep. The agenda today, very similar agenda to the gold sector review we did about this time last year. So providing a benchmark from last year to this year and the evolution that's sort of gone on within the sector, or how the sector's responded to higher prices. So next slide, please. So gold in 2025, as many investors in gold or gold equities will know, it's a stronger year than last year. The underlying gold price itself is up 54% in US dollar terms, 47 in Aussie dollar terms, and reached new highs as recently as October, and it's obviously cooled off a little bit since then. A lot of the factors we highlighted driving the gold price last year largely continued this year, with certain aspects amplifying compared to last year, particularly geopolitical tensions, trade war elements, economic concerns, and I guess expectations of a more sustained and deeper rate cutting cycle also helped amplify that. This sat generally on top of a core underlying current in the gold market, which is just ongoing central bank buying and a lot of central banks making gold a much larger proportion of their reserves. And obviously in the last month or so, we've seen a little bit more volatility as some of these tailwinds I've just highlighted have peaked out. They've probably just passed their worst point. Trade war tensions are easing. Maybe rate cutting expectations aren't quite as bullish as they were probably considered a few months ago. And for us, that is probably a good signal that the gold sector is entering another period of consolidation, similar to early to mid this year as well. Next slide, please. So the impact on gold equities, continued gold price plus continued, moderate cost conditions, fuel prices, energy prices, etc., has driven very strong earnings and free cash flow growth in a lot of the gold miners. And owning gold stocks actually became a lot more mainstream as well, given the strong performance relative to other sectors that investors can invest in, like tech, etc. The key indices for gold miners, broad index, the juniors, and even the ASX gold index were all up exceptionally strong and vastly outperformed gold. Often there's a gripe that the miners don't quite perform like gold does, and you sort of get left behind. Raising levels and activity levels in the gold sector have increased dramatically compared to last year, and last year was a pretty strong year to the year before that. So there's just a lot more money being raised for exploration, development, expanding production, and supplementing M&A. Recent gold price volatility is driving volatility in the gold equities, which have derated a little bit. Flows are sort of coming out of this space. And they'll follow suit with the gold price with at least a consolidation. So whilst they'll still look cheap, assuming this current gold price level for some time, I think for that to start showing back up in the equities, you just need consistent gold price to sort of occur for a little while as well. Next slide, please. And this is just a chart showing the performance of those gold equity indices versus the gold price. Next slide, please. So this higher gold price has continued to enable a lot of production. Costs are relatively low. The economics of expanding production, building new mines, or even undertaking tolling has been supported. Scoping and feasibility studies are very value-adding because you can show very profitable mining operations, and in many cases, developers trade at significant discounts to the value of those assets. The environment highly incentivizes small-scale operations with tolling. WA, again, is a very popular place to do it, but there might be, emerging potential in places like Queensland and potentially Victoria to monetize smaller assets. But, do note in WA, the tolling capacities are actually getting very tight, and there's a lot more deals being done to mine small deposits than there is tolling capacity available. So that's probably going to make those a little harder to do and a bit more expensive to do as well, albeit they'll still be quite profitable in this gold environment. Just on the right-hand side of that slide, just trying to highlight a number of companies are either being able to build mines or start tolling operations, restart old deposits that perform a lot better at higher gold prices. Other companies have been able to sustain tolling operations to generate cash flow that can support bigger project opportunity, and just highlighting the potential that if there's any companies that can offer tolling capacity in the near term, that is potentially exceptionally valuable commodity to have. Next slide, please. Capital raisings. Last year we highlighted there was an acceleration in capital raisings with around, I think, about $1 billion in a non-exhaustive list. Redoing that analysis this year, I've counted $2.8 billion of raisings alone in the gold sector. Again, non-exhaustive, so that number could potentially be $3 billion or higher. It's just not the ability to raise, the amount of money going. A lot of deals are subscribed multiple times over. Several companies have been able to do it multiple times within a year. And it's not absolute dollars, but percentage of market cap, they're very big raises. And until probably the last month or two, most people who participate in capital raisings have generally performed well thereafter. So with capital flowing, across the spectrum, explorers are definitely seeing a lot more interest in there, with people willing to put capital to work to, take risk in exploration as well. And insider participation is still generally a regular occurrence, which is always a good thing to see. Next slide, please. And this is just a table sort of highlighting, 51 deals that I've at least put into a table. There's definitely a lot of smaller ones that could be 2, 3, 4, 5 million. A lot of explorers that aren't included in there. Next slide, please. M&A activity has also accelerated. It's been a big year on the ASX, dominated by 2 deals being Gurry and Gold Roads, and Spartan as well. With Ramelius, mergers, are more common as well. There have been several deals where you sort of get more of a merger of equals, where 1 + 1 hopefully equals 3. Some create value, some consolidate regions and assets which have strategic long-term value potential, and there's a couple that have probably been a bit more on the financial engineering side, get you bumped in the 200 index and get more flows, and can definitely drive a re-rate from a multiple perspective on the earnings or cash flows. Given the value of producers and the cash flow generated there versus developers, there's a massive disconnect in valuations that's still present in the market, and this is probably indicative that there'll be a lot more M&A to come as well. And the average multiple on deals I've got listed there for resources and reserves. The medians there as well, it's lower. The range is still wide. The averages and medians generally haven't ticked up in the last year or two with the higher gold price. So there's definitely many factors that drive the value of an asset to be considerate of as well. Next slide, please. There's also asset level transactions that are quite common. Kaiser buying Henty from Catalyst to give it
We may have a slight issue there with Josh. Josh, what we'll do is we'll turn your camera off, which might make it a bit easier for you. There we go. We've got you back, Josh.
Sorry about that. Not sure what happened there. And even infrastructure has value. So Black Cat bought Lakewood off Westgold when that became non-core, and that transaction is very value accretive. Again, they've got excess capacity. They've offered some tolling. And then, Horizon divested the Lake Johnson asset to Forestania. So Forestania is aggregating some gold assets around that mill and has value. And in the context of Horizon, they paid 30 million for Poseidon and then sold Lake Johnson for 35. So they've gotten everything else for free, which are the important assets. So yeah, definitely a lot of activity at the asset level as well as the corporate level. Next slide, please. So just running through the presenting companies. So Horizon Minerals, we've got ongoing research coverage there. So anyone who reads and keeps abreast of that's probably got a good handle on what the Horizon is doing, but they've ramped up production from 2 assets. The big period of cash flow generation is to come, particularly from Bamborough, as you finish the processing run with mining dropping off this quarter. Key catalysts, ongoing drilling for resource definition and upgrading, plus engineering studies, which all supports the Black Swan refurb, which is a key value creation catalyst with Horizon. The company's also shown tactical asset management, where they've acquired attractive bolt-ons and divested assets that don't fit into the strategic picture as well to create value. With existing cash, estimated free cash flow, we think the equity contribution or the equity funding for the Black Swan refurb is very strong. Potentially not much residual funding left, which can definitely be handled by debt. And we have a current valuation of 24.6 cents a share based on a $5,250 gold price. And obviously Aussie gold's trading comfortably above 6,000 still. Saturn Metals is a company we've noted several times on our RAAS Plus service as an attractive development play in the Australian gold sector. So the company continues to progress its flagship Apollo Hill project with a PFS and ore reserve due this quarter. That should highlight very strong, attractive economics and justify continuing progress of the project. Obviously very levered to the current gold price as well. Metallurgical characteristics unlocks heap leach, which is why a project with a apparent low head grade can be quite profitable. And that is something we've highlighted in our notes, explaining why the mineralogy is amenable to heap leach and how it works. There's also exploration upside, adding more bulk tons that can either expand or elongate the mine life, as well as introducing new higher grade domains in the footwall zone, which might add incremental value as alternative processing solutions. And after another raise just the other month or late September, 64 million cash on hand. Saturn is exceptionally well funded to carry itself through to the DFS and potentially even FID. And lastly, we have Aureka, which is another company of ours under coverage on the watchlist solution. Focus exploration work on the Irvine and St. Bernard projects. They've maintained ongoing drilling since kicking off exploration post-listing in late last year. 7 kilometres plus expected to be done by the end of the year. There's an improving understanding of the geology, particularly at Irvine, which is what we think is driving improved and more consistent exploration success. This gives clear potential to add to the resource base, giving the project and the company potentially critical mass to progress through development stages. The recent divestment of Tandara adds extra cash to the books, which will get refocused on Irvine. So there's a consolidation of the asset base to focus on key projects, of which they control 100% of. And based on the existing resources, Aureka still looks quite cheap compared to peers, or trades at a significant discount. So ongoing exploration, resource expansion should hopefully start to close that gap going forward. And that wraps up my presentation. So thank you, everyone.
Thanks, Josh. Great presentation. Really set the scene for the rest of the presentations to come. We'll welcome you back at the end of the presentations, where we'll have that panel session and a wider discussion around the macro situation in the gold market. So, Josh, thanks for that, and we'll talk to you again shortly. It's now my pleasure to welcome our first company presenter, Grant Haywood, Chief Executive Officer of Horizon Minerals. Horizon has transitioned into a cash-generating producer through Bamborough and Phillips Fine, and is now advancing the Black Swan refurbishment and gold conversion. The company is progressing towards becoming a standalone producer by early 2027, and Grant will now outline operational progress, near-term catalysts, and the broader strategic outlook for the business. Grant, welcome to the webinar, and over to you.
Yeah, thanks, David, for the introduction, and also to RAAS Research Group for hosting us today. If we can just click forward 2 slides, please. So I suppose just looking at us and who we are, our assets are based in the eastern goldfields of Western Australia, around Kalgoorlie, a premier mining address in the world. We're currently producing from 2 assets, as Josh mentioned. We're also undertaking a feasibility study. So you can see the map on the right-hand side there. You can see our Black Swan processing facility. So we acquired that asset in February through a merger with Poseidon Nickel for a $30 million scrip deal, which also bought in the Lake Johnson processing plant as well. So we currently have 2 processing facilities in the portfolio, in addition to our 1.8 million ounces of gold resources we have in the ground around Kalgoorlie. We also have our Nimbus Silver Zinc project, which has also got 20 million ounces of silver, which is only a 20-minute drive sort of to the east of Kalgoorlie as well. So we're currently producing from 2 assets and are producing gold in a very good gold price environment. And we're aiming to close the funding gap on the refurbishment and repurpose of our Black Swan processing facility, which will convert to a gold plant. Next slide, please. So just a quick look at us at a glance. Closing share price as of Monday. Got about 3 billion shares on issue. We also did a merger with a company called Greenstone Resources, which bought 500,000 ounces into the portfolio in June last year. And that was the precursor to actually pulling the trigger on the Poseidon deal. So it gave us enough confidence with our resource base that we could actually purchase a plant and refurbish it and be an independent gold producer under our own right, rather than using third-party toll treatment as we do now. So that's why our register is quite large at the moment, with the shares on issue. Market cap around 180. We're well cashed up as of the end of the September quarter, $34 million in the bank. We had a bit of modest debt, 1.7 million as of the end of the quarter. That's now gone. So that was a small facility through Nabari Partners and a convertible, which has now been fully converted. So we're now debt-free. And an EV very cheap, as most MDs will tell you. But on EV per resource ounce, we see ourselves with plenty of room to run. Just a quick one on the board and management team. Look, we're a very hands-on and technical group, covering the areas of mining engineering with myself, metallurgy, geology, and corporate finance. So we've got over 150 years of experience in the Eastern Goldfields of WA, and believe we've got the team to execute our growth plans. Next slide, please. So what are we doing? So we're currently producing gold from our Bamborough project and our Phillips Fine project through third-party processing. We've currently doing study work at the moment. So we've engaged GR Engineering that are doing a pre-feasibility study to convert our Black Swan processing plant into a gold plant. And we're also engaged Mining Plus, so we'll get a minimum of a 5-year life of mine plan through that Black Swan plant. So we've got an aspirational target of being a 100,000 ounce producer with a minimum mine life of 5 years. And the initial run rate through the plant will be 1.5 million tonnes per annum, knowing that the nameplate is 2.2 million tonnes per annum. So there's plenty of opportunity to accelerate our growth plans and also bring in toll treatment opportunities in the region, which Josh mentioned are very tight for third parties at the moment. Next slide, please. So moving on to our Bamborough project. Next slide, thanks. You can look at the map on the right-hand side. Kalgoorlie is right in the centre of the map there. Our Black Swan processing facility, you can see, is 40 kilometres sort of to the north of Kalgoorlie, and all our tenure you can see there is in the red ground. So we've got over 1,300 square kilometres, a large extensive package, and you can see all the bubbles coming out there with our resource base. So the two key resources we have is our Bamborough project, which is 428,000 ounces and only sort of 15 kilometres to the east of Kalgoorlie. And then on the bottom left of the map, you can see our Burbanks project. So this is the asset we acquired in June last year with the Greenstone merger, 466,000 ounces there. So we do have resources sort of straddled all around Kalgoorlie, but our Burbanks and Bamborough projects are what we call our cornerstone assets, so 900,000 ounces or half our resource book, and they will underpin the feed into that Black Swan processing facility. Next slide, please. So this is an aerial shot of our Bamborough project. We started mining this project in August last year, poured our first gold bars in January this year, and have probably treated a bit over half of our planned 1.2 million tonnes through our ore purchase agreement we have with Norton Goldfields that own the Paddington plant. So we're currently invested a lot of money in pre-strip and building large stockpiles. We've got probably 290,000 tonnes of high-grade stockpiles at this mine at the moment. So we're aiming to finish mining this current December quarter, and we'll keep treating through till about April next year. So not incurring any more mining costs post this quarter. We'll harvest some pretty strong cash flows, particularly through the March quarter and through to April next year. This project, as I mentioned, is one of our cornerstone assets, and even after depletion, we still have close to 400,000 ounces that can provide that base load feed to our Black Swan processing facility. Next slide, please. Our Phillips Fine project is located 45 kilometres to the northwest of Coolgardie. It's currently a cutback on 2 open pits. What we did is we started mining this project in October and put our first gold bars in February this year. This operation is performing very strongly. What we didn't want to do is we've got our own management team and technical team running Bamborough, and 2 months later we started this project, and we didn't want to stretch our own capability starting two projects very closely together, and we didn't want to stretch our balance sheet. So we've got a very good, capable group, BML Ventures, that have come in and they're managing this project, and they're also using their balance sheet for the working capital. So we haven't put a cent into this project, and this project's going very well for us. So we've already received $5.5 million in distributions. This project will also be completed this current December quarter and processed this current quarter, and we should get final distributions from this project around January next year. Next slide, please. The jewel in the crown for us really is our Black Swan processing facility. As Josh mentioned before, processing capacity on a toll basis and ore purchase basis is getting extremely tight in Kalgoorlie. We'd love to turn on another asset and do some more toll treatment and generate more cash to reduce the funding gap required to refurbish this plant. But the capacity is very, very tight. So we look forward to doing the study work, which I said we'll release this quarter. Our plans are that we'll then move into detailed design and EPC contracts, look to award those late in the March quarter next year, and then start construction very early in the June quarter next year. It's a 12-month build, so we look forward to commissioning in the first half of 2027. It's got a nameplate capacity of 2.2 million tonnes, and we've got a 5-year life of mine plan as a minimum at a run rate of 1.5 million tonnes. So as I said earlier, we've got opportunities to either accelerate our own plans or bring in some toll treatment, which is very value accretive at the moment. Next slide, please. So what we're doing at Black Swan is it's currently a nickel concentrator, whether it's nickel or gold. The front end, the comminution circuit's exactly the same. So the crushers and the 2 mills we have in place there, we have a ball mill and a SAG mill, which we can refurbish. And what we're doing is we're building the gold circuit on the back end of the current plant. So we'll just build the CIL tanks, the absorption tank, solution circuit, gold room, gravity circuit, and it's pretty sort of bread and butter Goldfields sort of CIL circuit on the back end of the plant. We do want to leave the flotation circuit intact, and we're not refurbishing that at this stage because we do have great optionality with the nickel in the ground at Black Swan. There's 240,000 tonnes of metal. And we also have our Nimbus Silver Zinc project, which I mentioned earlier, which has got 20 million ounces of silver and 104,000 tonnes of zinc in the resource base there, which is also amenable to flotation. So we have great optionality, and we're building into the flow sheet that we can actually switch between circuits between the gold and also the flotation circuit to give us great optionality in the future. Next slide, please. Our Burbanks project, so this is our largest resource base. It's quite a good grade asset, high grades. We're currently drilling this asset now. We're doing a 15,000 metre infill program to increase the confidence of this asset. You can probably see the amount of inferred material, particularly on the underground perspective. There's only 10% in the indicated category. When we release our studies later this quarter, most of our resource base is at a PFS level and quoting reserves. This asset, with where the inferred material and the amount of it there is, will be at a scoping level of study, but we're currently infilling at the moment to improve that classification and then move this through to PFS and reserves sort of around the mid to late next year. Following the 15,000 metre infill program, we're also doing an extensional program which will start after Christmas and look to grow this resource further. And this project's one of those great projects. It's sort of the more you drill, the more you find. You can see the shapes there in yellow and orange is the current resource envelope. Only 30% of it's been drilled to 500 metres depth, and 10,000 metres was put into this asset in 2023 and increased the resource by 190,000 ounces. So it's a very high grade asset, historically produced over 320,000 ounces at well into the double figure grade. So we look forward to providing further updates on the drilling programs at this asset. Next slide, please. A little bit more about the Black Swan area. So the area we saw around the processing plants at the top left there previously. The Poseidon guys pivoted to gold and sort of discovered 4 anomalies through some soils. There's a northern anomaly there and a prospect called Wilson's, which has got historical hits of 6 grams a tonne, and it's only 200 metres from the processing facility. So we look forward to putting some holes into that in the first half of next year. And a very early stage, but we're quietly excited about that project right next door to our Black Swan processing facility. Next slide, please. Just looking at our pipeline, we're currently mining on the right-hand side there, Phillips Fine and Bamborough. And the assets, as we move to the left, are all making up part of our scoping in our pre-feasibility study, which we'll get to market this year. So we do have a lot of projects that are already approved. Our Cannon Underground and our Penny's Find Underground are both fully permitted and ready to go. We could start mining there tomorrow if we wanted to. And other projects in various stages of approvals and development. So we believe we have a strong pipeline that we can feed that Black Swan plant for many years to come. Next slide, please. Just getting towards the end and talk a bit about consolidation. So you can see our tenure there is in red. We're not the largest by market cap in the goldfields, but we do have a dominant land position. As I mentioned earlier, 1,300 square k's. We've got the 3rd largest land holding in the district, only behind Aureka and Northern Star Resources. And a lot of our package that doesn't have resources on it is on key geological structures and largely under-drilled without modern exploration techniques. So we believe there's a lot of new discoveries that we can make and also a bit on consolidation. Like there's a lot more to go on the consolidation Eastern Goldfields of WA. There's assets there that are with majors that are stranded and too far from their processing infrastructure. And there's also third parties, as Josh mentioned, that haven't got a milling solution. So we can help provide that through Black Swan as well. So plenty more to go on the M&A front. Next slide, please. Lake Johnson. So we announced on Friday that we've divested this asset. As Josh said, we picked up all of Poseidon for $30 million in scripts, and we've sold this asset for $35 million. So $30 million in cash and $5 million in Forestania shares. So we share a bit in the upside. This asset for us, there's a couple of years of nickel reserves down there. There's lithium potential. There's also some good gold prospectivity, but we really don't have enough critical mass for resource base down there. We could look to consolidate this region as well, but look, we'd rather execute one project well, and that's our Black Swan project, our cornerstone project. So we've decided to divest this and divested it to a very capable group that already have a substantial resource base in the area and also doing further consolidation work through there. So this funding that we receive from this divestment will obviously help close the funding gap required to refurbish Black Swan. Next slide, please. So just to sum up, we're currently generating cash from two assets. We've already got over 30 million in the bank. We've got another 30 million to come by the end of January with this divestment, and we're also producing gold in a very strong environment at the moment. We've got a great leadership team, strength on the balance sheet, great resource base. The next catalyst for us and the next triggers really is our pre-feasibility study that will get out in this current quarter, and really looking forward to telling the market what this company can actually look like over the next 5 years. Thanks very much.
Thanks, Grant. Great presentation, and clearly achieved a great deal this year with big plans ahead. A couple of questions have come through. Right, with tolling availability tightening, and you touched on this in your presentation, how is Horizon positioning itself for consolidation or strategic partnerships?
Yeah, look, it's quite an interesting space at this stage. Due to that tight capacity, people are looking at future capacity. So we're not even completed our study yet, and we've got people knocking on the door and wanting to talk to us. We're currently got a 2.2 million tonne per annum nameplate. We're looking at running out our mine plan at 1.5 million tonnes. So we will have a bit of capacity, particularly in the early years, but ideally we'd like to consolidate the region more and put more of our own ore through the plant, but there will be some opportunity for toll treatment, particularly in the first year or two, I understand.
And in terms of your recent high-grade Burbanks intercepts, how does that influence potential underground mining scenarios?
Yeah, look, Burbanks is typical Coolgardie. It's narrow but good grades. So it does go down to 0.2, 0.3 meters wide. It can get out to sort of 6 meters wide. I actually cut my teeth in Coolgardie as a graduate engineer, and we can take the stopes quite narrow with good host rock conditions. So the good thing about Burbanks is it's quartz hosted, so it'll sort of shatter like glass when you blast it, but the sort of the basalt footwall and hang walls are very strong host rocks that you can actually take quite narrow. So we're still working through that process at the moment. So as we move from scoping to PFS level of study, we'll obviously increase our geotechnical knowledge, and we'll look to take those quite narrow. So the run rate we're looking at is, from an underground perspective, is probably around the 350 400,000 tonnes per annum to feed through Black Swan. So at the 1.5 million tonne per annum rate is sort of about a third of the feed. We don't think we can push it that much further just due to the narrow nature of the ore body itself, but it will provide some nice feed to the plant.
Thanks, Grant. A great presentation. We will bring you back a little bit later to have a more detailed conversation about the gold sector and your views on it. We look forward to welcoming you back. My apologies. But thanks for your presentation.
Thanks, David.
Our next presenter is someone well known across the WA gold sector. Please join me in welcoming Ian Bamborough, Managing Director of Saturn Metals. Saturn Metals controls the 2.24 million ounce Apollo Hill project, with highly favourable heap leach metallurgy and strong PFS progress. The company is well funded with more than $60 million in cash and continues to deliver strong drilling results. Ian, thank you for being with us today, and we look forward to your presentation.
Thanks very much, David, and thanks to Finola and Josh for having me on as well. And you wouldn't believe it, but I've actually lost my screen. So I can hear you, but not see you at all. Oh, there you go. You're back. Okay. Right. Without further ado then, now we've got the technical difficulties out of the way. That's a picture of Apollo Hill, virgin asset in the gold fields, about 50 kilometres southeast of Leonora. And I suppose that's an artist's rendition to preserve its beauty. If we could have the next slide, that'd be great. Location, you see the gold tenement package there, 1,000 square kilometres, central strategic land position on the Wiluna Norseman Greenstone Belt. At the heart of it are 2.24 million ounce and growing Apollo Hill Gold Project. Other points on there, good infrastructure, road, rail, gas pipelines, and of course good gold infrastructure, and that has been an area of great interest from a sort of corporate perspective in recent years. That said, that's been a very mill-based strategy, and we do sit outside that in terms of our processing route with heap leach. But a good address, I suppose, and we'll have a look at the asset next. So if you could go to the next slide, that'd be fantastic. Strengths on that corporate slide, as mentioned earlier, over 60 million in the bank, good position. We've kept a relatively tight share base since listing in 8 years there, with only 540 million shares on issue. The bottom left corner shows our institutional backing, which is about 57% at the moment, with some good cornerstone chunks, and long technical investors that have been with us and helped us really grow this asset for probably the last 4 to 5 years. The little graph down the bottom shows how we've been working hard to change the gap between our company valuation and project valuation, and really starting to catch that up, albeit when we did our studies at a much lower gold price, which we left behind a long time ago, of 2,665 Aussie. So I guess I can use that graph to say I believe I'm genuinely undervalued, or that there's definitely some room for growth. And for every meter we've drilled into that resource, we've added and converted into higher confidence categories, just under 9 ounces. Next slide would be great, please. All our ounces are contained in one single, simple, large open pit. The strip ratio, the ore to waste ratio on that pit is 1.5 to 1. So it very much is a bulk mining proposition. 10-meter mining benches, which means large selective mining units, which translates to low unit costs, and really leveraging the deposit's ability to work for economies of scale, as I suppose is what this asset's about. And next slide would be great. This is what it looks like in cross-section. The things I like to point out there is the ore body sticks out at surface in some very wide zones. You can imagine 3 ore zones there across that pit floor, which in many places are going to be 100 meters wide, which really again speaks to that bulk mining proposition, lower edge and dilution effects, simple open pit scheduling, no geologists running around on the pit floor necessarily marking out small ore zones and watching diggers. The black shell there was our resource in February this year. In July, we delivered a second one, which is the blue shell. We saw ounces come in inside the pit, which was fantastic, as that was, even as that pit grew, it kept that waste to ore ratio down. On the right-hand side there, you can see how the blue pit pulled down. There were some fantastic intersections we've reported this year. And yeah, I think obviously the white bits there, there's not a lot of waste on that particular section. And those pit shells, I guess that blue one was done at 3,550, and we're arguably getting quite dual constrained there under these gold prices today. Next slide would be great, thanks. This deposit works. The other massive strength is a clean, simple, efficient metallurgy. All the gold, you can see the little gold grains there, is contained within quartz veins, sheet of quartz vein sets, easily liberated when that rock is just crushed alone. And then because this is they are grains, they're easily digested under heap leach conditions and cyanidation. The fact that the bulk of this deposit is actually fresh rock plays into our hands in terms of really nice percolation rates on the heap leach. The geology is as simple as that: basalt stolerites with a remarkably similar alteration pattern, which keeps the chemistry the same. No carbon, no copper, no arsenic, no preg-robbing materials. And I guess the numbers there in terms of recovery are upper quartile for heap leach deposits around the globe, and some of those bigger numbers possibly heading, you know, at the 8 mil oxide transitional, which is of course the first dirt to come out, perhaps even heading into the upper 10th percentile of deposits. So it's one of our biggest strengths, and putting the mining economics and the geology together is really, you know, 1 + 1, I think, for this deposit is 3, or 1 × 1 equals better than 2. Next slide would be great, please. Those two elements together combined in our PEA into a pretty flat production schedule, 10 million tonnes for 10 years, producing about 122,000 ounces per annum recovered. In that scenario, we kept that ore to waste ratio down to 1.5, and I think it's worth pointing out at much discounted recoveries. So we took an approach for full-scale production of 75%, and despite our test work being in 90, 100-day kind of stacking schedules, we doubled that for the study to about 180. And of course, this is the PEA and the PFS due out soon. Next slide would be great. The way this really translates, I suppose, and when we put the study out, I think VanEck Exchange Traded Gold Fund, their sort of average portfolio cost was about 1,850, which is pretty much exactly where this study landed. So you could genuinely say, you know, a good low cost producer. But how it works really, if what we see there is the cost per ton is about $24 a ton, which is not bad. It works because of a sort of bulk mining cost, $4.50. You might see mining costs around the $5.50 for some of the bigger projects in our region. Processing costs, probably the best in Australia. With a mill CIL circuit, we're probably doing $17 a ton. So that heap leach processing, which is really just based on crushing alone and stacking on a heap, really helps. But at a 3,500 gold price, which was our highest sensitivity case we used in our PEA, that actually equates to $21 a ton margin. And where this business differs is this is very much a margin and volume business. So a $21 margin times 10 million tonne per annum is $210 million per annum free cash flow. And that's where this sort of bulk mining scenario really starts to kick in, and perhaps is more leveraged, particularly after capital's paid back to these higher gold price environments. Next slide would be great, please. This was the economics in that study. On the right-hand side, you see the numbers that we produced at that 2,665 gold. I think for us, this was the deposit had reached a critical mass. It was the first time we could, hand on heart, put our fingers on some economics. And, you know, we were starting to produce reasonable cash flow, 90 million a year, 122,000 ounces produced, reasonable banking metrics, 30% IRR, 2.8-year payback, and a net present value of about 388 million, which was, a positive NPV to capex ratio. And the sort of School of Economics says if it's above 1, you keep going. So I think we were delighted with that. We look at the numbers on the left, that was at that high sensitivity case of 3,500, and we start to look at $1 billion project and some very rapid payback. And I think this was pretty exciting for us and really gave us the right, let's keep pushing. And I think when we put this slide together, 5,400 was the gold price, and obviously we've left that behind now. So next slide would be great. There aren't that many heap leach assets in Western Australia, and where they are, they exist generally in bigger companies, or they've been historically mined, actually done quite well and finished. I think there's one in Kalgoorlie now called Bamborough, which is part of Norton Goldfields, and which is really owned by Chinese mining giant Zijin. But I suppose what this graph shows in terms of the bubbles on the right are some of the biggest, lowest cost producing gold mines in the world. Kinross's Bald Mountain, Florida Canyon, Integra, Marigold, SSR. So we're starting to hit the size of the bubble is the ounces. We're there on the bottom axis in size of the tons. We're sitting nicely in the middle in terms of grade. We've done our homework on our recovery, on our cost structure locally. And I think our strip ratio, for example, is much lower than Marigold's, which sits at about 3.5. However, their crushing cost is a lot less than us. So all things being equal, I think we've entered a very different PS space, I suppose, is the point of that graph. Next slide would be great. This is what the pre-feasibility is looking like. A lot more detail in it since the PEA. We've just spent a bit of time touring deposits, particularly in the US, and I think last year in Turkey, where we walked every inch of one of these circuits to make sure we've got this design right. Since our PEA, we've decided we're going to put a gyro crusher instead of a draw crusher, which gives us a little bit more capacity and control on product. You can see a pretty complicated screen deck in there, which is really about, again, consistency and control on product out to that pad. Some good stockpile management and fine ore bins and 2 agglomeration drums instead of 1. But it's really about control on what for us is actually quite a simple ore scenario. But once we get that material on that pad, it needs to be in the best form, consistency of product, so that your heap leaching really performs. So that just gives you a view on capital, and the pit design in the background. It's got geotechnical information in it now, ramp designs, and I think we've come a long way. Next slide would be great, please. Exploration this year has been fantastic. So as we saw on that earlier slide, we saw a head grade for this asset of about 0.51 in the resource. Notwithstanding, there is some beautiful zones within this, and there is a higher grade architecture. And these are some of the intersections which have come from every, if you look on the right, every geographic region all the way around the deposit. But I suppose there's some intersections there that your average kind of mill CIL scenario would be quite happy to have. And I think it really, we're going to have a look at some slides now. Down in the south, there's a big blob on that slide where you can just see the word Iris. We had 6 rigs on site. We got some beautiful, thicker, higher grade intersections down there in one of these zones, and really gave it a good hammering this year. And I think it's highlighted, along with the other holes, how this system really joins up and works and unlocks some huge exploration potential. If we had a look at the next slide, that'd be great. In long section on Iris, I guess the blocks to the right-hand side of the diagram or to the north are kind of orange and red and pink, and the blocks to the left-hand side and the south around Iris and Tefnut are pink, purple, black, and we even have white little drill intersections in there for white hot. And you can, the trained eye can start to see some higher grade plunging shoots in there, which are really quite impressive. And you could even imagine a geological fault between the two. That picture's put at scale, both horizontal and vertical, which gives you a feel for the size of the asset we're looking at. But we're going to have a bit of a look now at really what Iris is. So next slide would be great. There's your Iris zone, and I think obviously they're pretty interesting intersections. This is a picture of the block model still at bulk size mining, 0.75 gram cutoff. And if we did a few more clicks and keep going, you probably need about 11, I think. If you go, yeah, I suppose the point here, and if you actually look at the dates of some of these, there's some beautiful intersections. 54 meters at 3.72, 33 at 5. That was actually 2021, 10 at 5.78, 2019, 12 at 9, 2020. And what happened this year with about 65,000 meters, not only did we see Iris and its potential and where it's going to go next, but we actually joined the dots between some of these sort of historical intersections. And Paul, if you want, that's the skeleton. Some of those intersections you could think of as a kidney or a liver, and we're still looking for the heart, I suppose. So the next slide would be great. So this is the picture, and there's a few arrows here now, so I'll get you to click and keep clicking. Smart geologist tracks to the north. We actually start to see some of these trends, and if we keep clicking and clicking, you start to see how that pattern has the potential to repeat with these lead intersections. And I suppose what's really impressive is where those different structures and different orientations cross, that we start to get these blowouts. And now that pattern is underway or very visible. You can see those circles there, which is where we're drilling right now. And I'm pretty pleased with the geology and the progress of that program. So next slide would be great, please. Last but not least, regionally, all we've looked at really today in the presentation is the little kind of bright glowing yellow bit in the middle around to the red where Apollo Hill is. It's worth noting there is 1,000 kilometers there. There's 16 prospects outside of that. There's quite a few trends. That's actually the drill results, not geochemistry. Probably 40% of that land package still hasn't had a hole, and arguably now, given the pattern you can see there, probably in the best position of, you know, the second order displays that the geologists love to follow when we get a bit technical and excited. Aquarius down the southeast there, quite important. That ground we picked up off Sumitomo Metals and Mining. I think for them, they're kind of targeting 500,000 ounce per annum production, and maybe they didn't think that was there. For us, that anomaly is about 15 kilometers long, and it's not an anomaly, it's really a separate gold system, separate gold camp. And I do think our future exploration, after we've done our land surveys, heritage surveys this next year, really have the potential to make another step change, let alone the other opportunities and the geophysical picture under that. Next slide would be great. In a nutshell, PFS due December. So once I get off this presentation, I'll be back writing that. DFS October, November next year, and obviously regulatory approval starting off the back of a very detailed plan. Drill program never stops, explorations in our DNA. And thank you very much.
Thanks, Ian. Great presentation. Clearly a lot of work being done and big plans ahead. Time for two quick questions. You're targeting a December quarter PFS. What final elements are being completed, and how should investors view reserve conversion potential?
Final elements being completed is the writing of the document. I think that's where we are. So I'd have a good view in my head where we are now, and subject to running that through the board, obviously. And
how should investors view reserve conversion potential?
Yeah, look, I think because this is a bulk mining asset, look, the measured and indicated in our last resource was 1.84 million ounces. So given I have to base my reserve on measured and indicated only, that gives you a maximum position. That's about 82% of the expanded 2.24 million ounce. I think our DFS were kind of targeting the 2 million ounce black shell I showed you from earlier in terms of resource. The PEA was at 1.64. The maximum I can be is 1.84. Reserve, is going to sit. So the PFS case is going to sit somewhere in the middle, and the reserve obviously is going to be smaller a little bit again. So.
Thanks, Ian. A great presentation. A lot to watch over the coming months. So we will watch and follow the company with interest. We will welcome you back at the completion of the next presentation to have a bit more of a broader discussion about the macro environment for gold. So, Ian, thanks for your time.
Thanks, David.
Our final company presenter today is James Gurry, Managing Director of Aureka Limited. James has overseen a significant rebuild of the company over the past 18 months, refocusing the business on high potential Victorian gold systems at Irvine and St Arnaud. Again, apologies if I've mispronounced that. James, welcome, and we look forward to hearing more about Aureka's growth and exploration strategy.
David, thanks a lot. I've enjoyed the previous presentations, and let's get into Aureka. We're a little bit smaller than those other companies, which I think makes us very exciting, and we're underway in drilling. So if you want to flick through the next couple of disclaimer slides, we'll get into the snapshot. We've got two key projects, both with JORC Resources. We're in high-grade Victoria, as everyone knows what Victoria is famous for, and the type of results and exploration success that Victoria can deliver. We were very fortunate to pick up a portfolio of advanced stage exploration projects across Victoria, including the JORC resource of 304,000 ounces at a good grade, 2.43 grams, and that is from surface at the flagship Irvine project near Stawell. It's only 16 kilometres from the operating Stawell gold mine, which is a fantastic position to be in. And our second project is St Arnaud. It's 70 k's away. It's more of a brownfields proposition, given that it is a previously mined pit, and we declared a JORC resource on that earlier in the year. So our company is well positioned with a top tier executive team. We're pretty well funded at the moment, which is great. We're drilling away, and these assets themselves used to trade on a market cap of well over 100 million going back 5 years ago. We were fortunate enough through a restructure and tumultuous period to be able to pick them up. And we recapitalized the company, as you said, David. And it was a pleasure to present on this call around 12 months ago. Since then, we're up about 60% in the share price, but there are multiples to go from here. So if we go through to the next slide, that'd be great. As I said, we've got 128 million shares on issue, a couple of institutions, including SG Hiscock involved, which is great. Our share register really features ultra high net worth people, which is terrific, backing the company as we came out with the new profile Aureka, and came onto the ASX around this time last year. So that's terrific. We had about $2.94 million cash in the bank at the end of the last quarter. We've sold a joint venture since then for over $1 million, which is great, and we are drilling away. So that's terrific. Might go through to the next slide. We're trading for well under $50 an ounce, and as we activate these projects and get them towards development stage, we really do see the re-rating for a potential to get them up towards the peer group, which we think is trading at about $145 an ounce. And Josh has been out there to our sites recently, actually, and Josh's research is available on our own website, and I'm sure on the RAAS website as well. I really appreciate Josh's attention to detail and the research that he has done on our portfolio. Over to the next slide. Just to run you through the executive team, we've been able to put together a really high caliber group of individuals to take Aureka forward as we go into next year and the years beyond. We're led by Graham Hunt, the non-executive chairman. People might know him as the CEO at the time that Lihir was sold to Newcrest after a couple of bids. Most recently, he's been involved at AGL Energy, and he spent the bulk of his career, obviously, at BHP. I'm a long-time mining analyst at investment banks, Credit Suisse and Deutsche Bank. I was also on the board of Red Hawk Iron Ore, and it was sold earlier this year to Fortescue, which is great. Richard Taylor, non-executive director, a lot of experience in small caps and in gold. And really, we're trying to lean into the success stories here in Victoria. Angela spreads her time between Southern Cross, ourselves, and some other clients. And it's great to have Angela as our executive director and technical director, really helping Joseph Story, who joined us about 4 or 5 months ago from Barrick. He was always based here in Melbourne, flying out to Africa, managing a large team there. But it's great to be able to have Joseph join us and really put a new slant and bringing in a world-class expert in terms of being our exploration manager and leading the employee team as we go forward. Next slide. And just click it once more. Yeah, this is why we're here. These assets used to trade for well over $100 million going back 5 years ago. And that's the opportunity that I saw when I picked up these assets out of a distressed situation. Now, we bought them for less than $1 million. We recapitalized the company and we brought it back to the ASX at about this time last year. And we've just hit our straps in terms of what you can see on the left-hand side and the share price being driven by high-grade drill results. We have just been able to deliver some very similar high-grade drill results on the main project outside the JORC resource and in the exploration target area. So we are actually showing that the flagship project, the Irvine project, can deliver those really high grades. We have 183 grams per tonne over a small section recently, which is great. And so the guys are still busy drilling away and we're doing those follow-up holes. So really gives a good demonstration of the value potential, the value that I and the rest of the board recognised as we put the company together and brought it back onto the ASX late last year. Next slide. We started the year, and if you do a bit of a click, you'll see what we've added this year in terms of the JORC resource. If you just click the slide, we started the year with 304,000 ounces, and we realised when we got hold of the portfolio and at the start of this year where the gold price was, we had enough holes in the Comstock Saturn project to actually declare a starter-sized JORC resource, 57,000 ounces at a grade of 1.21. So we've increased the JORC resource by 19% this year on top of the drilling that we have done that really hasn't even gone into a JORC update yet, and we're looking to do that in the months ahead. So we've added to the overall size of our resource as we go forward, and those two projects are not too far away from each other when we're thinking about trucking and transportation to mills. Next slide. We might just play the video. I'm not sure if the sound is going to work, but you let me know. Doesn't look like it is going to work, but gives a very good overview here of where our projects are. We're about 2.5 hours drive northwest of Melbourne. We're on the Melbourne to Adelaide freeway. So we've got excellent infrastructure right across our flagship project. It's a busy highway and also a railway that connects us not only to Stawell, that's 16 kilometres up the road, but also it's less than 100 kilometres or around 100 kilometres down to Ballarat. So that's two operating mills within the vicinity and within the transport links that we do have Our JORC resource is spread across those two lodes, the Resolution and Adventure lode. Most of it is all over the Resolution lode, and that was the first discovered back in 2017. And we've just come out with some of the highest grade hits that the Resolution has had since discovery. Because we came out with those hits just recently, you won't see them in this video. But for a company that's less than 25 million market cap, we inherited a terrific resource here on the flagship project, and around $20 million of a drill out previously, where the previous team got to that 300,000 ounces before they put the tools down and went up to Queensland, and that didn't work out too well. But if you look further south and sort of back towards Melbourne, the size of the prize is there on the right-hand side. 5 million ounces mined at the Stawell Gold Mine in Magdala. We're on to 300,000 ounces already, and we've got an exploration target of a similar size on top of that. So that's a good quick overview of the Irvine project. And we go into the next slides. I'll give you an update on where we have been drilling most recently. So the current program is on the edge of the JORC resource. The inferred resource is depicted there in the darker red colour, the exploration target in the pinkish lighter colour. Now we're doing those holes in the light pink at the moment, and the drill rig is positioned on the edge of the JORC resource there, so that we're doing extensional drilling, and it's small extensional drilling at the moment, which is great, and we're having a lot of success. As you can see, I think it was last month we came out with the 10 meters at 12 grams per ton, including a section at 0.3 at 183 grams per ton. And also, it's not depicted on here, but there was another section in there also, I think it was 0.3 as well, at 65 grams per ton. So terrific to get some real head-turning drill results on our project, and we've had some other successes there in terms of the high grade. The good thing is about our small cap company is that we're continuously drilling, and the drill rig won't be moving from its current position at least for another probably 4 or 5 months at the moment, while we do this series of extensional drilling. And also we'll be able to turn the rig in the coming months as well and do some of the infill, so that we can increase the confidence on some of that inferred resource into the higher confidence categories. Over the history of the Irvine project and drilling into the Resolution lode and the Adventure lode, there hasn't been a whole lot of visible gold, but pleasingly, we've seen visible gold across 3 sections in the last few months, and one of those sections yielded those ultra high grades that we reported to the market most recently, and certainly drove our share price up quite a bit, but there's a lot more to go. So if we go into the next slides as well. This is a zoom in on the Resolution lode itself, and it was great to get those hits there in the darker green call out bars, and you can see they're outside the current JORC resource, which is terrific and bodes well for an upgrade to the JORC resource in due course. And we're drilling down now in between RD46 and RD48. We've intersected the mineralization, or the high grade mineralization there, at a depth of around 413 meters, which is very mineable. And you can see the outline of the open cut, which makes up about 40% of the Resolution JORC resource at the moment. You can see the outline in the dotted white on the figure at the moment. So it makes for a good starting sort of project in terms of having an open cut, and we've got the underground potential as we go. And obviously, as you can see, we're testing the extensions of the underground. What we've actually discovered to date is that the mineralization is perhaps not as steeply dipping as what we have it depicted in this figure, which is very, very encouraging for us. And so it's probably a shallower system as we go. If we go on to the next slide. This is some of the recent high-grade hits. And just a thing to note here, they're basalt domes that's depicted there. It looks purple to me. And we actually intersected some mineralization there. You can see on the left-hand side, we want to follow up that nearer surface mineralization on the other side. So that's on the western side of that basalt dome. That's the first time that we've really tested and we intersected mineralization there, which is fantastic. So it gives us a lot more ground to follow up in the coming months, because all the mineralization thus far was shown to be on the eastern side, which you can see the intersecting sections down further below. If we keep moving forward, this is a good depiction of showing the high grade only around our system. We've got about 40 diamond drill holes into resolution, but we've only got about 10 into the adventure lode. So in 2026, what the team would really like to do is test in between the two lodes and test the adventure lode a whole lot more, because we think that there's a whole lot of untested ground here. And if we really want to make a step change and a big change to that 300,000 ounces that we've got, a couple of discovery style of drilling results next year would be really what we're after. And if we get another drill rig going, we would put it in that 2,000 meter gap in the limited exploration between the two lodes, and more drilling on adventure, because adventure, it's had less drilling, but it's actually yielded more high grade results. And you can sort of get an appreciation that both the lodes come to surface there on each end, and that's why the discovery is where it is at the moment. But there's a lot of potential, we think, in between, and we'll be flying a magnetic drone survey in the coming weeks to give us some better targeting and enhanced targeting as we plan to do that drilling next year. On to the next slide, please. Now, our second project is 70 kilometres up the road. It is the Saturn Goldfield. As you can appreciate, it is a large piece of tenement package that we've got there. It actually borders even onto the critical minerals territory on the far northwest of Victoria. But we're concentrating our efforts at the moment down right on that Saturn Goldfield, where historically there has been 400,000 ounces mined at a high grade, and we're focusing our efforts in there. The goldfield has yielded some high-grade results for the previous team and also other companies that have had it, including, I think it was Rex Resources that had a meter at 1,174 grams back in 2008 on one of the lines of mineralization that we have. So this is a project that we've drilled also recently. The drill rigs are not running currently, but we're actually catching up on the core that we did drill earlier. So if we go into the next slide, I've got another short video on the Saturn Goldfield, and we can run through it. Again, it's around, this is closer to 3 hours drive up from Melbourne through the productive areas of Ballarat. It's about 77 k's back down to Stawell, where we have the core shed. And the good thing about this project too is it's very close to a number of other gold mills in the area. And showing a bit of interest, given that this project certainly looks like a brownfields. And if I was to have a near-term producer in the portfolio, this is certainly it, because the Comstock pit, which we're going to zoom in on at the moment, has a number of lines of mineralization, including the Walkers and the Comstock shear veins. We've got the inferred resource that we came out with back in May this year. It's a good starter size resource. And this is a project in terms of Victoria that's probably a lot easier to get into production, given that it is an old pit and a disturbed mine site. It's on Crown land, and it's very easy access for us, and it's within a community that seems to be very encouraging of development in the general area. There are other shafts, historical shafts for us to follow up in terms of drilling in the future. And Saturn certainly bodes well for us, and the lines of mineralization go further out to the northwest. It goes further undercover to the northwest, so that's why most of the effort has been concentrated where it has to date. But it's a terrific project for us. If If we go into the next slide, I can explain further why. That's about 19 days ago, we came out with multiple veins containing visible gold at a depth of 115 to 124 meters. So some terrific pictures there on the left-hand side, and we really look forward to getting the assay results back from this, hopefully in the coming days. It'll be great to see what sort of a grade that we can get out of this. And as I did mention before, this pit and the nearby areas have yielded some terrific high-grade results. When I presented opened up the Noosa Mining Conference, I was the first presenter there in July. I think it was on the second or the third day of the conference. We came out with the hits of nearly a metre at 19 or 20 grams per tonne on the previous drilling, and let's see what the visible gold can yield for us this time. Maybe to give you just a bit of an indication, those hits that the 3 meters at nearly 5 grams and 7 meters at 4 grams, there wasn't any visible gold that I can remember on those ones. What we've drilled there to the north of the pit, going back sort of towards the middle of the pit. We look forward to seeing those results, hopefully in the coming days. So on to the next slide. This is a really good depiction of the pit at the moment. The visible gold, if you have a look at the JORC resource outline on the left-hand side there, you might be able to, if you squint a little bit, you can see 25 NED 002. That's the hole where we've reported the visible gold. And if you look at the picture on the right-hand side, we've intersected that visible gold probably where the photographer is standing and 115 meters underneath. So it's certainly encouraging of the mineralization going further as you look at it here back towards the north. And as you look at it there going down south, the mineralization branches out in a bit of a Y pattern. What we see here in the Comstock pit is potential near-term high-grade targeted production, given that there are some mills in the area that are reaching out to us saying that they've got some spare capacity. So we look forward to advancing this project probably in that manner, whereas the flagship project, the Irvine project, that's the one that's down the road from a 5 million ounce mine. That's the one where we think under our stewardship, we've got the 1 million ounce potential. So that's probably got the valuation upside, and this has got the revenue potential in terms of near-term revenue. On to the next slide, please. In terms of what we've delivered, we've certainly done our drilling that we promised this time last year when we raised around $6 million and came back onto the market. And we've really reported some terrific results, as I said, back in July, but also most recently on the flagship project at Irvine. We're doing that extension and infill diamond drilling at the moment. That'll take us to around 7,000 meters for the calendar year 2025. But in the drill rig position at the moment, and it's on that smallest red circle on the resolution load, we've got about another 3,000 or 4,000 meters to go. Another 10 holes will be delivered before the end of March or going into April next year. These holes are around 300 to 400 meters in depth. And as you can see, we have had the recent high-grade success there, including that small section, 183 grams. And all that, and the point of all this is to update our JORC resource. We're trading at less than $50 an ounce currently on our current JORC resource. And I think if we can show that this project, our flagship project, is on the move, we should be in line for a good re-rating there back up to where the peer group is trading. And also, as I said, we're currently talking to some mills in the area so that we can really show that there's a really good outlet for our projects from not only the Stawell gold mine that's up the road from the main project, but also here in Victoria, things are starting to move in terms of the gold industry consolidation and M&A action. We've participated by divesting our interest in the Tandara joint venture for cash most recently. And we've got a terrific 2026. And even, as I said, into the end of the year, we should be getting those assays back from the visual gold that we've seen at the Saturn project. So if you want to go on to the next slide, I think that's my final, or just highlighting the RAAS research again. And onto the final slide, I think after that, where it's a bit of a summary, and happy to take any questions or participate in the panel.
Thanks, James. Before we jump into the panel, I will throw a couple of questions at you. This asset package, if you like, had a valuation significantly higher than what the valuation of the company is now. What catalyst do you see to close the current valuation gap?
Good question, David. I think it's continued drill results. The previous team were focused on an operating asset up in Queensland, and so they put the tools down after the JORC resource was declared in March 2021. And as we showed in the chart earlier in the slide pack, these assets themselves really drove a market cap that's probably 4 to 5 times our current one, in a gold price environment that's half of where we are today. So I think if we can deliver and continue to show that we can get the drill results and grow that JORC resource, and particularly on the high grade, that's really what we want to do. And I think that will be the way to look after our current shareholders and introduce a lot more people to our stock, which is, I think, remains relatively less familiar to the market, given that we raised the capital from a small number of people. And so we haven't really done a whole lot of marketing. And people are just getting, used to our profile again as we go forward. But if you look at the portfolio, it's one of the biggest here in Victoria.
And in terms of, post recap, what's the runway look like? Have you got the money to do what you need to do in the short term?
Yeah, absolutely. We've got the money to continually run that drill rig that I spoke about, and that single drill rig on the edge of the JORC resource, which is really good for that small extension drilling, and we're getting some really good results. And so that's on that single drill rig sort of momentum at the moment, and we've got that sort of 12 months runway right through to the middle of next year. And we're always looking for opportunities to simplify or consolidate the portfolio. We've sold that interest in a joint venture for some cash as well. But we are, given the results that we've had recently, a few investors have approached us about getting another drill rig going, because I mentioned in some of those slides before, if we really want to see a step change on our 300,000 ounces, should we be shooting for some discovery holes to really be able to infer that there's multiple styles of that resolution down dipping resource in the area of the Irvine project. And I think that's perhaps the big step change that we're all looking for.
And just touching on that, a question's come through around some of the high-grade shoots that you have identified. Do they have similarities to those seen elsewhere on the Storwall corridor? Are you seeing some similarities, or similarities, probably maybe just simplify it, to what else is around in the Storwall corridor?
Yeah, I think that's why it lends itself to potentially being processed at the Stawell Gold Mine most objectively. Whether that will happen, I'm not sure. But it all used to be held by Kirkland Lake, going from North Stawell to Stawell itself and down South Stawell. So there's a natural consolidation of that sort of flagship project area. We do have very similar, if not the same, rocks and geology that they've mined at the 5 million ounce Stawell Gold Mine. So, and we have, we're seeing the high grade gold now, but also it's fine grain gold disseminated within the sulfides that makes it very mineable, and a little bit different to some of the other systems here in Victoria where they can be very high grade but nuggety or inconsistent. As you can see from our JORC resource, there's the potential obviously to be mining it from surface, which makes for a very good long-term mine development, and making startup potentially nice and attractive from an economic point of view.
Great. Well, thanks, James. Stay on the line because I will be welcoming back Josh, Grant, and Ian to be part of our panel, which we will take a wider view on the macro fundamentals for gold as we currently see it. Remind people, if you've got any questions, please submit them through the Q&A button, and I'll put them to each of the presenters. Josh, maybe firstly of you, gold is roughly up 54 or so % year to date. Is this the beginning of a multi-year cycle or a short-term peak?
I think at this stage, gold hitting 44 US is probably indicative of a short-term peak, because there was quite a bit of things going on that you definitely don't see at the bottom of the cycle or the early days. People lining up to buy gold bars and things like that as well. And it seemed a pretty consensus trade. So I think in the short term, there's definitely a consolidation that has to sort of occur that can then build a base for another potential run in the gold price. I think what will be important is that a lot of the key drivers, or factors I think are key drivers, have to keep persisting and maybe reaccelerate in some cases to then sort of drive that another run in the gold price. The hard part's knowing how long you might have to wait to see those. And I think from a downside risk perspective, what could potentially have a more sustained correction in the gold price. So I know there's a lot of investors out there who think gold will generally go one way, and probably over time that'll be the case, but there can be a lot of volatility along the way. I think if central banks just stop buying in size or for a while at all, that takes away a very strong, consistent, large marginal demand driver. So the current, that sort of supports gold. So if anything were to happen to that factor, there could be a material correction. So it's something to keep in mind in that, gold can correct and go down 20, 30, 40% and have elongated periods of, sort of lower prices along the way. So just not a high probability view, but something to be mindful of as well, because when everyone's bullish and thinking it can only go up, my observation in history and investing in markets, it sort of indicates that the opposite might occur potentially.
So the trend over the last 12 or so months is equities have really accelerated significantly, or they've outperformed significantly the gold price. Is that a trend you expect to continue into 2026?
I think if the gold price can even consolidate within a relatively tight band, I think the longer you have the gold price hold a level, the fear of a bigger downside move starts to dissipate. And then what happens is those numbers and higher gold price assumptions will feed into earnings, cash flows, and then valuations. So I think a period of consolidation and some stability can start feeding back into the investor cycle. So when companies look cheap and earnings are high, cash flows are coming through, and investors start believing that level will happen for longer, another re-rating can come through. And that was sort of an event that was experienced earlier this year as well. So yeah, I think stability will then breed confidence that things are truly cheap, and downside risks become lower probabilities, and with that, flows come back in and re-ratings can occur again.
Now, I'm going to put the same question to each of you, Grant, Ian, and James. So you've got a little bit of time to think of it. But what does, firstly, to Grant, what does the current high gold price mean for your development sequencing?
Yeah, look, it gives us great optionality, I suppose. Previously, lower grade assets are now, making very good margins. So for us, it gives us opportunity to get our mill fuller quicker and make stronger margins in the short term. And I suppose it makes everything more bankable. So I think it just on the strength of the price alone, I think it makes studies look better. And I think, on the back of what Josh is saying, how long will it go for? So, I know at board level, we've been talking about, doing some puts and those sorts of things to protect the downside for probably well over a year. But we haven't pulled the trigger on those yet because we believe the price will still run at some stage. But we're building a nice cash balance, but we know we're going to need a funding gap at some stage to build our plant. So those conversations are always there. But yeah, I think gold price helps hide a lot of sins, but you need to make yourself bulletproof for the longer term when the cycle does come back.
And Ian, same question to you. What does the current gold price mean for your development sequencing?
Nothing. I think to Grant's point there, our studies will be done at a conservative gold price, and obviously that conservative gold price has come up a lot, but I think we'll still put a case forward which protects us from downside. So once we're up and running, and I think we, unlike Grant, we're still really a couple of years ago away through DFS and permits approvals and financing stage. So I think whilst I'm pretty bullish on the gold price, I think we design a mine, or we go into production in something that can withstand down cycles as well, and take the opportunity on the way up. But I think on gold alone, I mean, I think the central bank buying, I don't see that kind of steady pace stopping. I think the fundamentals that are driving that being increasing sovereign debt levels, the trend away from the dollar, you can now buy oil outside of the dollar. I think there is a de-dollarization in economies wishing to back themselves and not in US dollars. So I think that will continue. The spikes that we see, or the pushes, it can be, if you want that sort of household gold or jewelry, or like we've seen people, plowing into the mints recently to really drive things up. But I think the other fundamental thing is that the business world, traditionally people might see anywhere between 0.5%, 1% gold in their investment portfolios. It's not going to take much these days to see people move that to 2% or 4%. And when I say gold, it can be hard gold, actual physical gold, or it could even be, if you want, the soft gold, which is the stocks, the producers, the next stage developers, the exploration companies. And you might really see people perhaps provide more of a hedge given that global change that's happening. And I think that demand alone, if it doubles from 1 to 2 or 2 to 4, could have quite a reasonable short, medium term, and even obviously long term effect as well. So I think that's something. That's why I've got a bullish view.
And James, in the advanced exploration phase, how does the strong gold environment shape your exploration prioritisation?
It brings forward priorities such as, if you've got a brownfield looking project like we do at Saturn, we're certainly getting a lot more incoming queries about what we're doing with that asset and the potential for it. Here in Victoria, I think gold mills are producing as much as they possibly can from their current resources, and then they look across and see a company like ours, which we're very long on ounces. We're exploring a lot at the moment, but we also have shown that in this current environment we're willing to deal, and we've just sold our interest in a joint venture to Catalyst Metals, and so it means there's quite a bit of interest. So since we had those record gold hits, we've had about 5 investor trips from Melbourne, drive out 2 to 3 hours out to see our assets and back. So it's terrific to see the interest in the portfolio in this current gold price environment. And unless there's a breakout in trust and cooperation across the world, it'll be good to see the gold price hang in there at this high level.
So you've touched on M&A and consolidation, which is the sort of next line of questioning that's come through from a couple of people watching. So Josh, maybe for you to set the scene, With M&A activity rising, do you expect consolidation to accelerate?
I think generally you would expect consolidation and in what form. You've seen in areas like around Meekatharra, smaller groups are gobbled up by bigger groups, or larger companies will acquire new assets for growth as well. There's been many sort of mid and large cap gold names quite regularly quoted to be in data rooms and very interested in assets. So when margins are high, cash balances are high, ability to secure debt or issue scrip, you can, and with an investor base that wants you to grow as well, you can definitely see more of that going on. So yeah, just as long as there's a disconnect, there's always a chance of elevated M&A. But I think just given the way companies are potentially behaving, it doesn't necessarily have to be consolidating a region. You can just have larger companies come in and buy juniors and looking to add to a strong growth profile for total ounces at a group level.
So I'll put this question that's come through to each of our company presenters, all at different stages in their cycle, so to speak. So James, if I start with you, you've been through a little bit of this, but what features make a project attractive for acquisition today?
I think one, size, and two, if you're in Victoria like us, the ability to actually get it approved and into production. One of the things that we've done in our first 12 months is actually buy some of the freehold land where our JORC resource is, so that we can start to demonstrate to those larger groups that start to have a look at our flagship project, which has the 1 million ounce potential. Do we have the ability to actually get that up and going? And I think for us, doing the grunt work, acquiring some land, and taking the first steps towards the regulatory approvals and obviously the project studies, I think if we can set all that up, I think that they're the sort of things that that can facilitate M&A activity a little bit easier. Yeah.
And same question. You're in a different phase of the company development, but what features, if you're looking for a project, I'm not saying you are, but if you were looking for something, what would make them attractive as an acquisition?
I think the two things, and I'll call them equal. One is I think James's comment on size is important, but I also think quantifying the exploration potential and accurately determining what that size could be, and being able to get a view of that quite early on. And I think the other one is fundamentals, and does it stack up? Is it robust? Has the company done its metallurgy, for example? What is the environmental permitting route? How strong is the resource? How does it all add up? What's the capital cost? So I think a lot of detail and real work in fundamentals. But which one I sit on, I think if you can see a step through a process, that's something good, and if you can see a much bigger picture there, which you can convert with a drill bit, I think that can sometimes tip you over the edge as well.
Similar question, but I suppose looking through a different lens. You're bringing a processing plant online, a strong cash position, and a significant resource base. If you were looking for something, you're in a busy neighbourhood, what would you be looking for?
Yeah, a lot of the things that the other gents have spoken about. Recently we completed our deal with Yandal Resources, which brought in a package of ground only 12 kilometres to the south of the plant. And the resource base itself was quite small. It's only 20,000 ounces, but what caught our eye was the prospectivity of that package so close to our mill. So on the whole of it, it doesn't look like a big transaction, but our exploration team's quite excited to get the drill bit to work on that package. So it goes to Ian's comment about the prospectivity and the upside. But typically with us being a near-term producer through that plant, we're more looking at resources, and the more of that resources in the sort of the indicated and better category, the quicker we can turn the asset on. So whenever we go through our DD processes, we always rank it compared to our current targets that we've already got within our asset portfolio, and then it's like, well, does it actually add value, and when can we turn it on? And we've been quite active on the M&A space, but we need to turn some of our portfolio over and actually put it into other hands as well. If we're not going to drill on it in the next sort of 3 to 5 years, then it's probably not best suited with us, and we can put it to work with someone else who does want to get the drill bit to work. So I suppose for us, we're always looking to turn the portfolio over and improve it. But yeah, where our state is now, we'll look at sort of near development opportunities, probably more the priority, but we do look at good ground when it comes up, like the Andal ground.
That does bring us to the end of our panel. We've gone through a fair bit today. 3 great stories and a great overview from Josh. We wish you all the best moving forward. Busy year ahead for each of you. So thank you for your time.
Thank you.
Thank you.
Thanks a lot, everyone.
So thanks to our presenters, and thank you, Josh, for your insights throughout today's session. A recording of the webinar will be made available shortly. We encourage attendees to connect with the companies or RAAS Research for any follow-up questions. Thank you again for joining us, and have a